In this video, we're going to go over this past week's trades and the weekly recap. Before I get into the recap, if you're not in the room, you can find the link in the description of the video and in my bio section of social media accounts. Also, please like the video, subscribe to the channel if you haven't done so already. Now, I did finish the week with 11 wins, 5 losses for a win rate of 68.75%. Not very good. I like to target 85% for every week. And I just haven't been doing that. I have been taking a loss almost every day for the past month. And I used to have so many flawless days, and the market has just been so tricky and so trappy, and I think it's a mixture of being tricky and trappy and changing, and me possibly overthinking. So I mean, it doesn't happen sometimes. You got to keep things simple. You start overthinking, that's when you start getting into problems. And I gotta try to not do that next week, but sometimes I just try to overthink. I don't usually do that, but when I do, I'm not afraid to admit when I do it. No trader likes to admit they're wrong, but or their flaws or whatever. But it's because they're always perfect. I can't stand people that post their wins and their charts after the moves already happened, and saying, look how easy this is. Yeah, it's so easy. You already saw it after the move already happened. Try doing it in real time, like a real trader does, and you just base everything on what you see and your gut instincts, and sometimes they don't always align. But with that said, I know I'm a little ranting a little bit. I can't stand traders that post shit after the fact, or only post their winning trades and stuff like that, or their big winners, but they don't show the full picture. But me, I show my full picture and all my flaws that go with it. So with that said, Monday traded his room. I said SPY puts into 661, which is down here. We have been up at all-time highs for almost every day for like the last few weeks. I mean, for months. But I mean, we've just been chugging along, and every time SPY dips, it gets quickly bought up. And as you can see here, it dips, gets bought, and bought. I mean, it keeps going, and it's just the relentless buying has just been crazy. So when we came into Monday thinking, okay, maybe we will actually drop now. We're getting overheated. We put the call ratio was very, very low, I think, going into Monday. And I even said Monday morning, was it Monday morning or Sunday night? Something, before Monday market open, I said the put to call ratio is too low. Everyone's on the call side. We're gonna get a pullback either Monday or Tuesday, because whenever put the call ratio is very low or high, sometimes the move doesn't happen that next day or that day. It happens the next day usually. So I usually give it 1 to 3 days. So if you see put the call ratio very, very low or very, very high, in the next couple of days, next couple of trading days, you'll see the move actually happen most of the time. So that's why I was looking at puts, and of course it just took off. Monday being Monday, first trading day of the week, I always wait out the first half an hour usually, unless I'm expecting something major to happen at open, then I'll take a chance. But this day, no, I wasn't expecting anything, and it just took off. But we had a red candle. I wasn't chasing any of this. Well, anyway, 10 o'clock is right here, but we got a pullback. We get a red candle right here, and those I'll take every day. I won't chase green candle after green candle, because even if it's way up here, I won't chase it. I'd rather buy a red pullback up here than chase over here. I know it's higher and it defeats the purpose, but when you're having too many green candles in a row, something is going to end up happening. So I just stayed patient, waited for a red candle. I got it as soon as it broke high a day. I grabbed the 66.65 calls at 550, and they went from 550 to $9 on that play. Then I took puts at 207, which is right here. I'm not quite sure why I jumped into this. I just, let's see. So we already made new all-time high. I don't know why I even jumped into that. Maybe it was looking like it was getting ready to drop. I should not have gone against it. I should have just left it. But I see what I tried to do here. High a day, pull back, made new high a day, kind of sweeping out liquidity. Then it came back down, and once it broke below the 666 area, I think that's exactly where I grabbed that 666 area. I thought we were going to dump down to VWAP or something, but we didn't. It just, as soon as I got in, I got the 66.85 puts at $3. As soon as I got in, it popped. So I kept it just in case, and ended up being a loss. So then I'll also just keep Tesla up on this side because I traded Tesla on a couple times this week. So let me get the chart back up. And then this is the 23rd right here, right? Yep. Okay. Pull that up. Now pre-market on the 23rd, I said SPY puts under 666 because we had this massive run up, and 666 right here. I took puts at right here. Okay, I remember this play. Green opening candle, touching all-time high, again, rejecting this area not once, twice, 3 times, 4 times. So when we came up, rejected it, we broke lower day. I jumped on puts. To me, it ended up being a fake out. See, that's the thing. That ended up. I remember this trade because I should have stayed with it because my instincts were right. We rejected this area too many times. This is part of the opening games that SPY loves to do. We rejected the area, came back down. As soon as we broke new lower day, I grabbed the 66.85 puts at $6, and it came back up, and I stopped out right here. And what did it do? It dumped, and I was right. But the problem was, I mean, it could have gone to 670. I mean, you don't know where it's going to go. I mean, breaking all-time high again, but after having a pretty big move, we don't usually have. We have a big move like this, we usually have a consolidation day, or we give it back, or if we do have a continuation day, it's really not that strong. But usually it's a range day, so I was kind of expecting either a drop or at least a tight range. But I mean, we broke high a day, and I stopped out, and it ended up dropping. So I was very annoyed with that I took a loss on that I didn't need to. So yeah, because this day I was expecting it to be a range day because I'm looking at the trades I took. I took the rest of the day, the rest of the plays I took on SPY. I took calls on a down day. I should have just played the trend and just stuck with it. But for some reason, I overthought it, thinking that we were going to keep buying the dip because we have been. I was expecting a drop. Here, we never got it. So I was like, okay. But I should have remembered, I said we're going to pull back on Tuesday, but I didn't think we were going to pull back this deep. I mean, it's not really that deep. It's only $5. I mean, but lately when SPY has a red day, having a $5 red day seems like it's like massive because you just can't seem to get any red days whatsoever on SPY. They're minimal, and anytime it drops, it V-rallies. So you can't really trust anything with SPY lately, and that's what has been making SPY so tricky to trade. So after I took this loss, I jumped over to Tesla. I took Tesla puts at 1018, which is right here. As soon as it broke, I think when it broke the bodies of these candles of 435.13 of 10 area, that's when I grabbed the 430 puts at $7, and they went from $7 to $8.45, and that drop right there. So it ended up being a good play. And then it flagged and it dumped more, but I didn't play it again. I probably should have, but I was too busy trying to catch the knives. But I had reasons of catching the knives here on this play. Yeah, see right here we had support right here, right around the 665 area. So I grabbed calls at 10:25, which is right, what time? 10:25. That was up here. 10:25. What did I grab? Why did I grab calls up here? Oh, that was, yeah, okay, right here. Pre-market low. I don't show pre-market low, pre-market high a day on my Thinkorswim charts. I have them on my trading view charts. I don't want to mix the two, because I like to have a clean look, just having moving averages right here. I don't like having a bunch of lines on it, and so I didn't want to confuse myself. So I have trading view. I have pre-market high and low, and on my actual chart right here, as you can see right here, this is what my trading window right here. Let me make sure that you actually see what I see. Yeah, this is my actual trading window right here. And see, this green line right here is previous high a day, and this is previous low a day. So I don't want to put my pre-market high and low on the same chart with my previous markers, because I'll get confused what is what. So I keep my previous day's lows and highs on my Thinkorswim, because I've always had them on there. And just in the past month or two, I've been marking out my pre-market high day and lower day on my trading view, and it's been respecting it very, very well. So and I don't want to have the same two green lines and red lines on my trading chart, and then getting confused which one is which. I want to know what one's what. And when I think of swim, I know what those green line is, and I know what that red line is. And with trading view, I know what those lines are, so I'm not confused whatsoever. So I prefer to do it that way. And yeah, so I got it right here at let's see, 10:25, which is right here, which is pre-market low a day. So I bought calls thinking we were going to bounce off that and stay in the range. And we started to bounce a little bit, then we dumped. So I held on to my calls, which I probably shouldn't have done. What I did, I've been hanging on to my calls because the last couple months, anytime I've had calls, I've stopped out of like prematurely or too tight of a stop loss, and SPY has raged, and they end up going 100% after I stop out, and it's been really annoying as hell. So on the call side, I've just been holding them and waiting for the right areas to add and see if I get lucky. If I add and it goes against me, I'll cut it quick. And I end up adding right here at the 665, right around 1109 area. 1109. 1109, wait a minute. 1109. So I added right here. I didn't add down here. I added right here. I might get the right day here. Yeah, okay, I bought right here. Oh. Oh yeah, okay. Wait a minute. I bought it at 1109. And I got it at 1025, which is right here. Right in here. 1109. I added right here when it broke new low a day, and I sold into that little bounce. Yeah, I got it at 810. I added at 6, making my new average 650. This is the one I sold some. Yeah, this is the one I got. I sold some right here, and when it broke a low a day, I added, so I was able to bring my average down to 650, and it popped back up, and I dumped it at 750. Yeah, because a couple of the ones I had, I ended up selling half of them, and instead of dumping the rest at break even, which I should have done, I ended up just keeping them, waiting for a bigger bounce, and ended up adding, which probably wasn't too smart. But it is what it is. So I ended up getting out at 750, Then at 136, I didn't play this. Why didn't I play this? I thought I played this. Maybe I did play it in my Quest account. I'm almost sure I played this right here. I either played it in my Quest account or my IRA or something. I played this. I'm almost certain of it. But I ended up buying calls at 136. Right here. 136. There was a reason why I bought it here. What was that reason? 136. Oh, right here. This is previous days right here. Previous day's low right there. As soon as we broke it, I jumped into 66.50 calls at 11.60. Actually, I think I grabbed it right around close to 62.50 because I remember getting it a little prematurely. I think I remember saying I wanted to get it at 662. I think I jumped the gun and got it right around 662.40-ish or 50-ish. I got it a little early because SPY doesn't always hit the exact number. It overshoots or undershoots. It does it to all levels. It overshoots or undershoots. So I got it in case it undershot the level, and then I added when it actually hit the level, making my new average because I got it at 11.60. I went deep in the money with the idea that if I was wrong, I would still be in the money and I would add. And I did, and they ended up going super green. So they went from $9.70 to $14 in that play right there. So I definitely caught a falling knife. But you know, it was exact. It was exact opposite of Monday. This is Monday, and this is Tuesday. And this is weird because you can literally flip Monday upside down, and you'd have Tuesday. And Wednesday's neutral. But look at, this is Thursday and Friday. You tip Thursday upside down, you get Friday. It's so bizarre that it did that. I don't think I've ever seen that. But yeah, anyways. Wednesday the 24th, Trade Ideas Room, I said SPY calls over 665, which is up here. It didn't, it dumped. Red candle. I just don't like taking the new lower day on the second 10-minute candle because it's been faking out. I mean, look at this fake out on Tuesday, fake out on Monday, a little bit. No, Monday took off. I mean, it's just faking out. Wait here, look at the fake outs on Friday. I mean, on Thursday, no, that went a little bit. I mean, it's been like fake out city. Look at this. The first half an hour is just terrible. It does nothing but fake out. So I can't trust anything. And this is another thing I did. I think is this another one that I sold half? I'm gonna look at my exits on the 20. What day is that? The 24th. Yeah. I sold some on this one too. Okay, we'll get into that. I bought calls at 10.17, which is right 10.17, right here. I'm not quite sure where I got it. What time did I add? 11 o'clock. Okay, so I must have got it right here and sold it right here because I got the 66, 65 calls at 680. It dropped and it popped up. I got rid of some, and when it dropped back down, I added at 11 o'clock, which is right here, right at lower day, thinking that maybe we were gonna hold lower day, and then it dumped. So I added up 490, make a new average $6. I did end up cutting it quickly after that. So I just have not been good at dip buying this week. I mean, anytime you think it's going to dip buy, I mean, anytime you think it's going to dip to a level, it starts to, or it just flushes through it. I just got to try not to dip buy as recklessly as like I am. I need to kind of like be a little more cautious. And another thing is I don't have RSI on this chart. I have it on my TradingView chart so I can see divergences, but I usually prefer to look at the histogram, but the histogram divergences haven't been showing nearly as good as the RSI ones lately, and I don't usually pay attention to RSI much, but lately, You know, the last few months, I kind of look over it a little bit, but I've been kind of watching it a lot more than usual lately because they've been more defined than usual. Maybe it's just the way the market has been lately, but yeah, I bought here, sold some, then I bought more, added more, and trying to get a bigger run up through VWAP, and I just flushed lower day, and I ended up taking a loss. But I did end up switching sides out. I remember once it broke low day right here. I think what time did I add? 11:33. Wait, what? 11:33? Okay, no. Okay, I bought it. No, I'm looking at the wrong thing here. Okay. Yeah, okay, that's right. I bought the calls here, sold some here. When it came down here, I added more, and when it flushed lower day, I decided I dumped it, stopped out, and then I took puts right here when we broke this lower day, because right here, this is lower day right here. As soon as I broke that in this candle, at 11:33, that's when I grabbed the 66.50 puts at $8, and they went from $8 to 28. So that ended up being a good play. And then it's flagging right here. Then I end up taking puts at 148, which is right here. Went up to the 20 EMA, came back down once it broke below the 660, the 660, 50 area. That's when I grabbed the 66.30 puts at $6, and they went from $6 to $8.20 in that drop right there. So yeah, you know, this right here, normally what's been happening last few months, SPY has not been really breaking lower day. I mean, this is day number 2. This is red day number 2. I mean, this is unusual for SPY to break lower day, but you also got to remember the market makers are conditioning us to always buy and not have red days and not break lower day and this and that and that. So it's just a trapping. And if you would have grabbed puts at lower day over the past month or two, you would have taken a loss almost every day. In fact, I have taken some losses because of that, thinking, okay, we're going to dump, and we don't dump. We end up just bouncing right off lower day. You know, worst case is what we've been doing is we'll drop below lower day, maybe just by a couple points or 50 cents to really take out liquidity, then would rage the other way. So it was safe to say, I mean, it was going to do that until it didn't, and it didn't. So, yeah, it's just the market has just been very tricky. And we had 2 red days in a row. So then we had this massive gap down, which was like $4, $3. And I said in the traded days room, I said, calls over 659, which is up here, and that's what I was expecting, because when we have a gap down, a fairly big gap down, the first thing the market's going to do is everyone's going to jump in puts, thinking the world's fall is coming to an end, the sky is falling, everything's bad, and world's on fire, and everyone's going to jump into puts for Armageddon and stuff like that, all the warmongers and the bears, and what SPY does is it rockets. That's why when you see these $5 or $10 gap downs, you have monster green days that open. It's because that's exactly why. They sometimes what they'll do is when the market opens, they'll drop it just a little bit to really think that the sky's falling. And once they get people loaded in puts and trapped, they rip it the other way and just take all their money. And you just got to remember, that's what the market is designed to do. It's designed to take your money. So you got to kind of be smart. So I was not taking puts right away. I was not chasing this. In fact, I was taking calls. I was not chasing that. I didn't want to touch that. But when we had this hammer, we came up to the VWAP and rejected VWAP. As soon as I got back on the 656, I said, screw it. I'll take puts right here. And I'll take the 65 puts at 7:30, and they went from 7:30 to 11:30 right there. So I was very cautious about this, remembering and thinking that the market likes to bounce on these gap down days. So got a little bit of a a drop right there. Was not going to chase lower day. In fact, when they this hammer, I was not going to take it on the 656, but when it bounced up to 657 and came back down, I definitely was more interested in taking puts right here underneath 656 for a quick play. Then I took calls at 1043, which is right 1043 right here. Okay, I didn't take it a higher day, and the reason I didn't take it a higher day, because this candle is 655.51. That's a $2.50 candle right there. When almost every time we have a $2 candle, the next candle ends up being a fake out. So I don't like to take them. The next continuation plays off a $2 candle, so I'll ignore it. And I ignored it, and it popped up, pulled back a little bit. It came back up to higher day, so I grabbed calls. Again, we pulled back. I should have definitely waited for a red candle. This day was a nightmare to play. This whole day just was not good for me. I did everything wrong, but yeah, I came back up to higher day, and I had 66.25 calls at 680, so I pulled back. I think underneath 658, I added more 370, making my new average 560, and it dropped. So I stopped out. And was it to a VWAP? It bounces. I don't think they went green though, but they did go green over here. And so what did I do? When it came to VWAP, it bounced. It didn't make new high day, but it quickly came back to VWAP. I switched sides and went to puts. I grabbed puts right here, the 65.90 puts at 670. And as soon as, thinking that because we didn't make new high day and we came quickly back to VWAP, we were going to flush the lower day. So that was my thinking right there. We came that, because whenever you see a dip to VWAP, and then when it has a pops and it doesn't make high day, it comes down to VWAP again very, very quickly. I mean, this was very quickly. This was in the next candle. We usually flush VWAP, and we didn't. We bounced right back up, made new high day. And I didn't stop out. I mean, I just like, okay, I had calls here. I got stopped out, and they went green. They didn't go super green. I mean, they went, a little green, maybe like $1 or $2. Because I ended up averaging down right here, so I had a couple dollars up here. But when it didn't flush through VWAP and it came back up to high day, I said, the heck with it. I am not trading this. This 659 to VWAP area is a trap. They are trapping both sides. They're luring in both sides of it. So to me, it kind of looked like, they lured in the bulls here. They flushed them out. Then they popped it again, lured in the bulls, and flushed them out. Then they took out shorts, and then they dumped it. So I was just like, okay, I mean, I'm just gonna hold it. What's the worst that happens? I just finish the day right, or I just have a bad day, and then I just held it. And then they finally ended up going. That they didn't. I took it right around here, because it did end up eventually flushing through VWAP, and I had the 65.90 call puts at 670, and I got out at I think 860, and that's what they went to. 850 or something. I don't remember. But yeah, this got out in this candle right here and ended up dropping. So I think those puts ended up going to like $15-$20. But yeah, and this is what SPY's been doing right here. Lower day. This is what I was talking about. It flushes lower day and gets quickly bought up. That's what SPY's been doing, minus Tuesday and Wednesday. This is Thursday, right? Yeah. Minus Tuesday and Wednesday. This is what SPY's been doing every single day. If it makes new lower day, it either does a double bottom and bounces, or it flushes lower day, flushes liquidity, because all the liquidity is right here. They flush out liquidity and they rip it the other way. They get all the puts to come in here and they rip it the other way. So it's what SPY's been doing. And, and yeah. And this is, by the way, this is the third red day in a row. And statistically, SPY does not like going more than 3 red days in a row. I mean, I looked over the years and years and years. Yeah, SPY has red days here and there. But the most extreme you'll see is 3 to 5 days of red days in a row. Because what ends up happening is we have a short squeeze or something ends up happening. after the third or fourth day. So my mentality going into Friday the 26th, I said SPY calls over 661, which is up here. I told the room I was going to take calls right at open, and I didn't, but it ripped right at open. And but statistically, we had 3 red days. The fourth day is usually a green day. And if it didn't have to be a green day, then I was wrong. But whatever. But I was going based off from statistics. And statistically, a green day was in the cards for the day. And the first 10-minute candle was green, was like a $2 plus candle. And I normally don't chase this. But knowing that Friday is going to be a super green day, which I thought it was going to be a super green day. It was going to be normally a strong green day. I took calls right over high a day. I took the 66.50 calls at 6.50, and they went to $10 on that pump, on that push. And when SPY pulled back, I dip bought at VWAP. I got the 66.40 calls at 9.80, thinking we were going to bounce at VWAP. It flushed through VWAP, and I ended up adding at 666 area, the 660 area, and added at $7, made my new average 820. Then it dropped, and I stopped out. So I wasn't too happy about that, and I stopped out, and guess what happened? It ripped. Did the same thing SPY always does: flushes low a day, and rips back up. This is what SPY has been doing for months and months and months, except for the few days here and there, but 2 days this week. And yeah, so that's why I've been dip buying. That's why I have been like not stopping out of my calls, but adding to them because of this crap. And I knew eventually that me doing this would end up being crazy and probably stupid and not the best idea, but I mean, nothing is ever 100% in trading. If you're thinking you're going to find some magic strat, some magic quote system, which is bullshit, you're not going to find no magic system or no magic indicator, no magic strat. Every strat is only as good as you make it. And even the best strats, the ones I've been using for years, they go obsolete after a while. I've changed my strats over the last 5 years many times. The market evolves, the market changes, you get evolved with it. What works today won't work tomorrow, and what doesn't work today could work tomorrow. You just gotta look, see what is working. Like bringing up the pre-market high and low, I never used to pay attention to that because it never mattered, and now it matters. So now that it matters, I pay attention to it. See, this is right here, pre-market low a day. And where did it bounced right there. And that's another thing. That's what ends up happening. A few things I've noticed is that pre-market, when SPY when SPY ranges, and it's ranging in the middle of pre-market high and low, it likes to touch both sides. So if it touches pre-market high or gets above it and comes back in and then ranges back in it, it's more than likely going to touch low a day. This is pre-market high right here. Broke through it, came back in it, and pre-market low right here. It touched it, then bounced, and it came back up, touched the top. And this is what it's been doing. If we have a range day, it's going to be usually within pre-market high a day and pre-market low a day. And they matter. So I've been paying attention to them because they matter more now than they ever have. I've ever paid attention to. Before, it used to be previous low day, previous low high. Sorry, previous high day, previous low day. Used to be the big ones. And PDC, which is this white line, previous day's close, that still matters because that lined up with pre-market low a day and PDC, previous day's close. So they both lined up right there. So that's why I ended up bouncing. Like I said, low a day, flushed through, bounced up. So yeah, but I did take puts at 1047, which is right here. I took a loss right there, bounced up, didn't quite get the VWAP, but it came back down. You get the two bodies of these candles right here lined up perfectly. And I was thinking, okay, maybe we're going to shoot to 657. Maybe we're going to go red for a little bit. Worst case is if we don't go red, we go to PDC and bounce, and that's exactly what we did. See, I don't want to play break lower day, because SPY, like if I played it right here, I probably would have got puts right here, maybe too prematurely, and I got ripped on me. I would have taken a loss, because to me, in a range day, instead of playing breakouts of high day and breakouts of lower day, I will find a consolidation area and play off that. And I found this area right here where it bounced off PDC, tried to get the VWAP, didn't, and it set up these two green candles right here. And when it broke those two green bodies of the candle, that's where I grabbed puts. I grabbed the 6,600 puts at 790, and they went from 790 to 1060 right there. So, but yeah, it did bounce off previous day's close right here, and it stayed within pre-market high a day and pre-market range. So then the last play I took was Tesla. I took Tesla puts, because Tesla had a massive day. Right here, lower day is 421, and it went to 440. That's a $19 run. I mean, I wasn't even looking at Tesla at all until like I saw it reject 440, and right when I saw that, because I looked at it right at this candle, and as soon as it rejected 440, I was looking at I was like, wait a minute, that came from 421. That's a $19 move on a Friday. And Tesla is notorious for having monster days and giving it back right here. See, it gave it, had a monster run when it's 428 to 440, not as extreme, gave it back. That's not a day, but Tesla just went right here, massive run, 429 to 4, another $15 run. It gave it back, and Tesla's notorious for giving back its massive runs. So when I saw that, it's like a $19 run going into Friday afternoon that we were going to give some back. And so as soon as it got underneath 439, I grabbed the 440 puts at 233, sold some right there, came back up, rejected the 440 area, came back down, and we were at the 15 minutes to close. So I just stopped out the rest. I just dumped the rest. I sold most of mine over here for profit, and what the remaining I had was pretty much free money. So I was gonna let them go to zero, but it started to drop right here. I was thinking we were gonna dump right here, and it started to go back up. I just dumped the rest and just said, okay, whatever, I don't care. I just wanted to call it a day and get out. So yeah, that's pretty much my day. So I kind of want to, how much time do I get going on this so far? Wow, this is gonna be a long video. I'm gonna try to open, let's see, try to open up my other one here. Can this open another window? It did. Okay, I am just going to move this over here so you guys can see. Let's see, now make sure that my window is actually showing this. Okay, let me drop this. This is pre-market high and low. Yeah, see, that's the pre-market lows over there. But that pre-market high, pre-market low, it respected, oh no. See, it respects it right here. Right here, it bounced off it. And this is another thing to keep an eye on, that when it gets above it and comes back and retests it, it does like to bounce off from it. So that's something to keep an eye on. Pre-market high and low right here on Thursday. It flushes below, it comes back up, and it tests it, bounces up off it. So it does like to test it when it does manage to get outside of it. Like right here, it flushed through, it came back up, tested pre-market lower day, It's not going to let me go too far out. Down here, rejected it, came back down, bounced off from it. Of course, now that I'm talking about, yeah, right here, this is what I was talking about. When it's ranging, it got to pre-market high a day right here. Actually, that's pre-market. Oh, this opening candle came back up, didn't quite get pre-market high a day, came back down, tested low a day, bounced up, tested high, pre-market high. So yeah, pre-market low it tested, pre-market high it tested, and then it finally shot through. And down here, it's ranged in between it. I mean, bounced above it, came back up, almost went to pre-market high. This is FOMC, rejected pre-market high, went underneath it a little bit, pre-market low, bounced up. So yeah, usually right here, went above it, and the pre-market high a day acted as support, came back down, bounced off from it, went below and bounced up off from it. So yeah, it's not going to show anymore over there. So basically what I wanted to show you about the pre-market high and pre-market low. It's good to have both pre-market and previous days mapped out so you can see where SPY has a potential area to bounce. It was a long video. I'm sorry I rambled a lot, but there was some points I wanted to hammer home. So that's going to do it for the recap, and thanks for watching.